All right, we'll go ahead and get started. Welcome everyone to our Financial Literacy 101 workshop with Kimberly Schultz. I'm Carmen White, and I'll be behind the scenes helping Kimberly to moderate the chat and anything else as needed. But before we start, we just want to give you a little background on VETS2INDUSTRY and some information for you to reference if you need our assistance. So, VETS2INDUSTRY is a 501c3 nonprofit organization dedicated to helping veterans and spouses with the resources they need during their transition. So that's whether it's from the military, job to job, education. We're here to help you with all of those needs. So if you need assistance, please contact us at support@vets2industry.org. We'll also put that in the chat, and you can also visit our website at www.vets2industry.org. You can sign up via the website as well for assistance, or just go through the wealth of resources that we have there. And so now I want to get to the good part and introduce you to Kimberly. She is a passionate financial educator, and she actually reached out to us. She has been a volunteer for a few years, but she reached out to us to start this series for you so she could share her wealth of knowledge and help people take control of their finances and just build a more secure future as you're going through those transitions. So I'm going to turn it over to her, but please grab a notebook, use your computer, grab a friend, tell them to come and hear from Kimberly because she's got a lot of great information to share with you today. So turning it over to you, Kimberly.
Thank you, Carmen, for the introduction. So I know Carmen told you a little bit about what I do, but I'm going to help you guys today as more of a resource. So as I'm going through everything, if you have questions, we are going to open it up to Q&A at the end. Or if you need help with something specific or have additional questions, I'm going to have Carmen put my info in the chat via LinkedIn, or I can have her put my number as well. So we can always book a follow-up time where I can help you guys specifically. So a little bit about me as I'm sharing my screen here. Let me open this up. So I have been I came from a military family ever since I was a kid. Both of my grandfathers are World War II vets, which is awesome. And then my uncle is a Vietnam vet, all different branches. So I've been around the military my whole life. I grew up 15 minutes from West Point. But even as a family, we've always been passionate about giving back to the community and really helping the veteran community. So I have been volunteering. I used to volunteer at the VA hospital when I lived in Jacksonville. I saw just how underserved the benefits department was. And I saw that you guys really needed help. So that's what really started my passion and really continued it on to really figure out a way to give back to the community. And then ever since I found Vets to Industry, I've been volunteering. I help them plan their cruise because their mission is awesome. I mean, you guys need these resources. It's super important. And if anything at all, outside of what I do on the business, if you guys need help with resources, I have different people to connect to. I am like a super connector on LinkedIn. So if you need help in different areas, let me know. I'm happy to connect you guys. But anyway, let's get to the good stuff. So Revolution Financial Management, that is our company. I have been with the company about 5 years now. Just like you guys, for those of you who are thinking about corporate, I did come from the corporate sector. I used to book and plan events for Hyatt back in the day, but I knew that I wanted something more and to be able to make an impact. And then I kind of fell into this company. I got referred on the client side. And then I just saw how great the company was and really giving to back to the community, but also teaching and educating. So that's how I started my career with Revolution. So I'm going to go through a few things now on this here. So you'll see now, okay. So our company, as I'm going through it, as think about, okay, if there's something you need help with, obviously I want to help give value. That's my big priority for you. If you know somebody that could benefit, share the resources, share the wealth. I don't just work with the veteran community, but that is kind of my passion. So I do a lot with veterans or military, but I do help all families, all 50 states. And the other thing is, I'm not going to talk about it today, but if you know of anybody that is interested in a career opportunity, I am looking to mentor 5 people in the industry, whether you have industry knowledge or not, no experience. So we're not going to talk about that today, but if you need help with that or know somebody, let me know and we'll connect on that. So when you're looking at financial literacy and education, the things you want to pay attention to is your short-term savings, your long-term wealth, insurance protection, and then debt solutions and preserving wealth. So that's something you're paying attention to on a day-to-day. So as Americans, the responsibility that we have, think of your overall financial stability as like a stool. Social Security, we don't know if it's really going to be there. We're not 100% sure. Yes, they're making changes in the administration currently, but you can't really rely just on Social Security because at the end of the day, we know inflation is at an all-time high. Social Security is not going to pay out to keep up with inflation. Pensions, it with the military, you guys are lucky in that you still have the pensions available. You have your TSP accounts, but the pensions for a lot of other companies, when you get outside the military, it's not always guaranteed. There are loopholes, so you got to really look into it. So that's something that if you're basically left to figure out on your own how to save. Now, if you're saving for retirement and really making sure you can enjoy the quality of life you want to live, you got to really rely on your personal savings and then really optimize your current investments. So when anytime you're looking at your overall savings and expenses, when you're doing budgets, about 50% of people's income is going to living expenses, 25 is going to taxes, so they never see it, and 25 is going to debt. And then as far as the dramatic need for financial literacy, this is why it's so important for what we're doing. More than 60% of Americans are living paycheck to paycheck, and more than half of those Americans are making over six figures, which is insane. More than a third of Americans do have more credit card debt than they do in an emergency fund. That's why you're seeing people charge the credit cards because their wage gap is not catching up. And then 44% of US adults would pay, they couldn't afford $1,000 emergency, which is a big deal. If 66% of Americans were to lose, their primary source of income, they would worry that they wouldn't have enough money, even just the basic cost of living. So with on the life insurance side, and I know I'm going to talk more about that too for the military and what you guys have. So Americans with life insurance feel financially secure of about 62%, but 46% of Americans either don't have life insurance at all, or they don't have enough coverage, or they're not sure what's going on. And then many people don't have life insurance. It's not because they think it costs too much money, but also they're just not sure what they have or what their options are or who to even trust for that. So that's something to keep in mind. And then what our company and why we're so different is we're teaching with education, but we also have the backing and support by a lot of major companies. I don't know if any of you are familiar with Transamerica, but we have the backing and support by them in Aegon. Aegon traditionally was in the healthcare space. Now they've transitioned their focus to the financial services because they see what we're doing. But we don't just work with those companies. And we'll go over everybody else that we work with. So this is probably one of the most important slides I'm going to go over. This is the 6 steps to financial independence. So anytime you're looking at your budget and your cash flow, obviously you want to live below your means, right? If possible. I know it's easier said than done these days, but when you're looking at your budget and doing that, I don't know how often you guys are doing it, but even if you do it quarterly, monthly, whatever works for your family, if it's annually, that works too. But if you don't have like something to follow, you don't really know where your money's going. So as far as your cash flow, I always tell people now, you're starting to see it more than ever. People can't rely on one stream of income. There really isn't job security anymore like there used to be. So any additional income you can earn as a family is not a bad idea. The more streams of incomes you have to pull from, especially as you're getting older and in retirement, the better. And then you want to live below your means. So for example, you see people do it all the time. Their cars are way more expensive. Their car payments are like half their monthly income, or their houses are too expensive. So when you're looking at the day-to-day expenses, look at ways that you can cut out. Have you looked at your car insurance in a while? Is it a little bit too high? Have you shopped around a little bit? Same thing with even utilities. I don't know, depending upon where you're located in the US, in Texas here, they do have, the power to choose where you can shop around all your electric companies. So there's different ways to look at it, but the biggest things when you're looking at a budget that people don't realize that they do have control over is usually their utilities, like your cable, your internet, what you're saving on the day-to-day basis. That's something you want to pay attention to. And then the emergency fund, this is huge. Every family should save at least 3 to 6 months of their monthly income. We know Americans are living paycheck to paycheck, but in the military, you guys are getting a good amount of pay, depending upon what rank you are. So you want to be at least saving a part of that income, God forbid something happens. Usually, when people don't have that emergency fund, that's when they start charging credit cards, and then it becomes an issue. They're putting themselves in debt. So with the emergency fund, yeah, another good thing to do with that as far as savings is going to be a high yield savings account. I don't know if you guys are familiar with that, but those are going to be a little bit higher interest than your normal bank, your checking or savings account. So when you're looking at liquid assets, high yield savings accounts are great for that. And then I'm not going to go into too much, but if you have questions on that, we can talk at the end about it. Debt management, this is huge. You want to consolidate as much debt as possible. The strategy that we usually teach families is debt stacking. So when you're looking at the interest rates, you want to pay attention to the one that has the highest interest rate, and you want to pay over on that one and then minimums on the rest. The reason why is if you just keep paying the minimums on the credit cards, you're really not paying towards the principal, you're really paying towards the interest. So that you want to get rid of the highest interest first and then minimums on the rest. And then once you're done paying off that card, you go on to the next highest interest. So that's something to keep in mind. As far as debt management overall, if you've heard of consolidation or credit repair, it depends on the situation. I'm not going to say it's good or it's bad. Every situation will be different, but you want to pay attention to because sometimes with those consolidations and the credit repair, you're actually going to end up paying more in interest. Even if it's a lower monthly payment, you might be paying more in interest long term. So always do your research on that. But the biggest thing you can do is if you're learning how to pay down the debt the right way, you won't have to worry about the debt consolidation. Proper protection, this is huge for you guys. This is the life insurance side. This life insurance has changed a lot over the years. It's not just for after someone's passed. There are a lot of living benefits that can help you and your family. So what you're looking at too, you guys get the SGLI and then VGLI when you get out. The things you want to pay attention to when you're actually going through it is, do you have enough coverage as a family, and is it the most cost effective for you, and is it doing what you want it to do for you? So with SGLI, we know you automatically get that if you're a service member. But when you're looking at it, okay, when your time is up or when you decide to get out of the military, it doesn't necessarily go with you. You either have to opt into it or you pay a little bit more if you want to extend it. So there's different stipulations with it. But the things when you're looking at how much life insurance you want to be getting or is enough for you guys, you want to look at how much debt you have as a family. If you have a mortgage, if you have any education you're paying for yourself or for your kids, and then replacing your income. So statistically speaking, it takes 10 years for a spouse to recover financially if their loved one passes away. So that's something to keep in mind. The other thing too is if you guys are going to file disability claims, you want to look at your life insurance before you do that, because if you wait till after, everything now from your med boards is now hit your records. So it's not that you wouldn't get approved, you just may be approved at a higher rating and or it may cost more money, or you may not get some of the living benefits depending upon if you have any medical injuries. So that's something to keep in mind. As far as building wealth, you want to outpace inflation and reduce taxes. There are multiple ways to retire on the tax-free or reduce taxes in retirement. And then the biggest thing is you want to build a family legacy. So those are the most important things when you're going over the 6 really steps to financial independence. Other tips too, and I forgot to mention this for credit cards. If you're paying down credit cards, if you make an extra payment in a month, even if it's say you have one on auto draft for your minimum payment, or if you're overpaying on that one, by even paying one extra payment a month, even if it's $20, $30 more, that's going to also help boost your credit. Same thing as far as when if you're paying before the due date, that also helps. And even if you're looking at tips too, like I have a 24-hour rule for anybody that's into online shopping or Amazon or any of that. Pay attention to impulse buys. So if you have something where, everyone's guilty of it, they see something online, they're like, oh, that looks awesome, let me go buy it, right? If you wait 24 hours, put it in the cart and still see if you need it, then you'll limit how many impulse buys you have. I forgot to mention that the last time. But anyway, we're going to keep going. So the education, Anytime somebody's doing a budget or anytime I'm working with families, we always do the budget first. I can't make any recommendations, even if I'm teaching you how to get out of debt or save money. I do a budget or a financial needs analysis with you. And then anybody that sits with me, we sit down and we go over a game plan. You get a copy of the budget, the game plan sheet, the strategy. It breaks it down what to do, even how to save, how to get out of debt, whatever it is that's important to you. And then we make the recommendations. There's no pressure. I don't have to sell you anything. I don't have any quotas. It's truly informational for you guys, which is awesome. These are some of the big companies that we work with on our platform. Our company is similar to Amazon. We don't make our own products, but we do all the services and the education behind it. So when you're looking at the products, there's over 220 companies and carriers on our platform. These are, you probably recognize some of them: Fidelity, Voya, Financial, Nationwide. They're all on our platform. So when we're sitting with families, we're giving them the power to choose. We're helping them on the education side, but I'll go back and say they need help on the investment side or the, the strategy side of the life insurance. I'll research the companies and sit back down with them. I do the application process too. So if you're ever worried, like, okay, where do I get all this info? We walk you through that. So that is something that of how we're different from everybody else. We're going to switch gears now. I'm going to go over some tangibles like concepts of money and wealth. So when you're looking at the process of wealth creation, the 3 rules of money, these are the things you want to pay attention to: the compounding effect, the tax effect, and the risk effect. So if you're protecting your income and replacing your income, that's where you're really going to start to create generational wealth. Our mission is really no family left behind. So when you're looking at that, those are really going to be the keys to success. This is a huge one. If you've never heard of financial independence number, that's your target of what you're working towards. So if you're focusing, say, even if you're retiring 20 years from now, you want to at least know what your target is, and that also combats inflation. So when you're calculating that, and you can get into the weeds with it, but when you're doing a budget, you want to look at what your monthly expenses are versus what your income is. Even if you want to live off of more or less in retirement, you can still figure it out based on that. So when you're looking at your total income of what you want to live off of in retirement, you multiply that by 12 because there's 12 months in a year. And then what you divide that by 0.06. The reason why you divide it by 0.06 is to combat inflation. We know inflation's higher than that right now, but historically, the closer average is 6%. So that's why you do that. Now, if you really want to take it a step further, there's even financial calculators out there that will tell you, okay, if you already have a certain amount saved for retirement and say you're getting a 10% rate of return, how much do you need to be saving monthly? You can break it down there. But if you don't have that number, you don't really know, you can't really start building a strategy if you don't have that number. The other thing to pay attention to is, I'll be fully transparent. Most families right now, even if you want to live off of $5,000 a month, you need at least over $1 million to retire. So I know that I don't say that to scare people, but the more you're doing now, the sooner you start, the better it's going to be for you guys long term. This is just an example too of how time can either work for you or against you when you're looking at your assets. So time can either be your greatest ally or your worst enemy. So this is an example of someone saving 5,000 a year in a tax deferred account that's getting about a 10% rate of return. So for someone that has 40 years and they put in 200K of their own money with a 10% rate of return, they're up to 2.2 million. So say person B, they start 2 years later, now there's 1.8 million instead of 2.2. So there's a 400,000 difference, which is a big difference for you guys. This is a huge one, the compounding interest. So if you divide 72 by any rate of return for any investment, that's how long it's going to take for your money to double. So most people, where do you think they save in their account? And usually it's a savings account. Well, if you've ever noticed, it usually takes 1% on a normal savings account. It's going to take 72 years for your money to double, which is a very long time, especially if you need over $1 million to retire. 7.2 years, that's a better number. You want to shoot for over 10% rate of return on your long-term investments. Your high yield savings accounts are usually going to get you between 4 and 6%. This also works for credit cards. So if you have credit cards and you want to see how long it's going to take to pay them down, that works too. Now, the risk effect for your money, these are three different strategies that you can focus on as far as fixed, variable, index. So fixed account, that's the safe option. That's going to give you safety but limited growth. That's your normal bank account. Variables like the stock market. So it's going to give you not as much safety, but it's going to give you growth opportunity. A lot of times you're going to see your 401ks, your IRAs, your 403bs, TSP accounts. And then index, this is the one that most people don't know about. You have safety, but also growth. When the market goes up, you're going to get gains, but they may put a cap on your gains. And then when the market goes down, you have a minimum floor or buffer. This is going to give you a little bit more flexibility where you don't have all your eggs in basket. So so say you have something that's variable, you have your stock market, it's okay to have that. But if all of your eggs are in that basket and then you lose a bunch of money, especially if you're close to retirement, it's going to take you a really long time to make that money back. This is how taxes work. This is a big one. A lot of people don't realize this. So when you're looking at your taxable income and how to reduce taxes in retirement, the taxable category, that's going to be anything from your checking account, your savings account, CD account, stocks, mutual funds. That's taxed annually. Then you have tax deferred, which means it's taxed at withdrawal. So these are your 401ks, your 403bs, 457, your IRAs, annuities, pensions, TSP. The problem with this is that where do you think taxes are going to be in the near future? Most people would say up, right? So if your taxes are up and then you're making your highest income right before you retire, you're going to be a bit put in a higher tax bracket, which means more of your money is going to go back to the IRS. So in order to balance that out, you want to look at the tax advantage side. So this is going to be taxed now at your current tax bracket. And then it'll be when you go to retire, that money is now tax free. So the main ways for that are really a Roth IRA, a 529 college plan for your kids, an executive bonus plan if you're an entrepreneur, a business owner, long-term care benefits, and then investment grade insurance. So that's something to really pay attention to. And then outside of that, I don't have anything else because this is more on the business side of what we do. But I hope I'm going to open it up to Q&A. Does anybody have any questions on the education, certain concepts? I hope it's valuable for you guys. If you need any other tips as far as veterans and how to get your ducks in a row, even if you're still active duty, I have lots of tips for that, but it is customized for you guys based on not every family is going to be the same. So anybody have any questions?